Here we go. Hello, everyone. Alright guys, we are live TGIF, a little late today, but back again Friday nonetheless, and we have market update. So what are we going over today? Again, our market update to see where properties are selling, coming soon, etc. We're going to talk about rates. So if you're looking to buy, sell, always good to know where the rates are at. And we have our monthly recap, so we get to see how the month of July did. So always good to see, obviously, weekly, week to week, to track the trends, but then we get to see the bigger picture for the whole month. So, and then the next quarter should be coming up soon. And then, of course, gonna plug a video that I made, and then we have our multi-million-dollar memorial condo. So let's hop right into it now. No, I don't like that. I don't like that transition. There we go. All right, so what do we have here? We have our weekly update. So we have our year-over-year comparison, and we have new listings are down a little bit, not too much, but it is an 8% drop. So it is a little bit more. That's my dog in the back. That is more than it was last week. So if this continues to happen, so that now three out of the past 4 weeks, there has been a decline in new listings. So can this mean we're going into, kind of like the slower part of the market time of the year, or is this a dip? So if we see another week, then yeah, I will say this is probably where things are going to happen coming to the rest of the year, or predictably for the rest of the year. Then we have, of course, our pending listings. So these are homes that are going under contract that are hopefully going to close in about a month. And we have a 6% increase in homes going under contract. So that is a good thing. For sellers, that's great. For buyers, that means that the demand is still there, which is probably an indication of rates still being relatively low, which they are. What else we got here? Off market, we'll skip that one. All right, closings are a bit down. Okay, so what does that mean? Well, it just could be a direct correlation to the number of listings going down, right? Not as many homes are going to the market, which means there's not, the pool of homes that can close is down. And of course, if you've been tracking week to week, you would have seen how the number of homes coming to the market has gone down, kind of losing the steam a little bit. So as if that continues to happen, then closings will, not dry up, but essentially we're kind of closing out that faucet because there's just not as much inventory coming in. So what does that mean for sellers? Well, if the closings continue to go down, inventory continues to go down, it's going to be, I think, a very competitive market for sellers. It just means that you need to have your property ready. And for buyers, it's going to be super tight. It's going to mean that being able to see 20 houses or have your pick of 20 houses before you decide, probably not going to be the case. And of course, this can change. It can vary neighborhood to neighborhood. It's all different. But on a big picture view, that's what we should be expecting. And the good thing is the activity is still there. We still have 28%. All right, 28% here of showings are still up. That means that demand, the interest is still high. So will this continue is a big question. As less homes come to the market, will the showings still continue at a high level? If that continues to happen, then I think that's a healthy for everyone involved, for sellers and buyers, because that just means that the demand is still there. All right, and then of course we have our virtual traffic still up. Still up, continues to trend super high compared to year over year. So let's look at the monthly sales data. Very interesting numbers to look at. But before we get to that, I wanted to share, give myself a plug. So I went ahead and so I found out about a special program. This is for FHA buyers. So if you're an FHA buyer, if you have a home financed through FHA, then reach out to me, because this program is available to you and it could save you a whole bunch of money right now. So this is a private video. I'm not posting it publicly just because I want to make sure who gets this video is an FHA buyer, to not confuse kind of the general public, as if my videos get thousands of views. But that's my logic behind that. So again, shoot me a message or shoot me a text, and reach out to me. Basically, I'll get you that video. All right, so let's move on to the monthly numbers to see where we're at. Here we are. So we got this to zoom a little bit better. Here we go. So we have our month to month, year over year chart. So let's see where we're at here. And the numbers are pretty good, just to let you know. So we're looking at total volume sales from July of last year to this year, 25% increase. Pretty good given the fact that there's a pandemic going on. And then we have, this is where the supply and demand comes into play. So there was a 25% increase year over year in July, but yet there is 20% less homes available for sale. So I feel like this is going to be a combination of serious sellers and serious buyers. It just means that the sellers know what they have and they're serious about selling. They should, in times of uncertainty, right? So if you're selling for sure, something's like, you're not testing the waters, most likely. So sellers are ready to sell, and then buyers are ready to buy. Because if you're buying and selling in these times, then I feel like you're determined, right? You've done your research, you have financial stability. So these are good. These are good conditions for a successful transaction, whether you buy or selling. All right, so what do we have here? Sales price. So the median sales price for single family homes went up. So great, right? Great for buyers. I mean, great for sellers. Not the best thing for buyers, but this increase, 8% increase in value, is offset a little bit by the lower interest rates. So the whole train of thought that you can kind of go by is there's two things that will increase your cost. It's going to be, if the rates don't change, then the price values have gone up, right, tremendously. But you can offset, right, if there's a 8% increase by getting a 3% or less interest. Maybe not offset completely, but you won't feel the punch, right? Which goes back to the original train of thought, which is homes get more expensive every year to buy. And that is true, because typically a traditional trend towards real estate is appreciation in value, and then rates are eventually going to go up. So they usually do. They usually do, 0.25%, 0.5%. I've seen in the past 5 years that I've been in the industry. and you know, you have to take those things into consideration. So you know, as a trend. But times like this where rates are low, you can take advantage of that, and the same house will cost you less. Once things stabilize, rates go back up towards 4%, maybe over 4%, that same house will not cost the same anymore. It'll be more expensive. So, and then you can see here, inventory is down. Again, the supply and demand. So, as you can see here, we're back to the medium home price, $271. And it's just kind of been trending for the past 5-year trend. So back in 32 seconds, trying to find it here. I don't know what color is what, but back 5 years ago, looks like the median home price would have been in what, 210, 215, and now it's gone up to 260, 255. It's a huge increase. So if you're a seller, great equity, great return on investment. If you're a buyer, it just means you need to buy something sooner. Looking at the numbers here, if you look here, so the price point, the biggest increase has gone from 150, basically from 250 to 750. There's been a huge increase. The decrease in homes under 150, I think that's just because less homes are available at that price point, and I know that for a fact. Anything less than 150, very hard to come by. So let's this is the home units, and then townhouses are on the downward trend. So what do we have? Highlights here: following strong performance in June, home sales soared in July. And this is very typical of what we would see in April. Probably the case if there wasn't a pandemic going on. And so we had an increase in units sold. Dollar volume obviously went up because values went up. And then median home prices went up 8%, almost 9%. Yeah, it looks like the inventory is low now, because in July it was 4.2. Now it is at a 4%. All right, so let's go and hop into our multi-million-dollar tour. So this house is, let's look at the details. This house, it's a condo, it's a high-rise, and it is a huge high-rise, 7,000 square feet, 4 bedrooms, 5 full baths, and a guest bathroom. This thing is crazy. This is in the Memorial area, so I'm curious. There you go. It was a good view. All right, let's see it. So what do we have here? Look at this piano, that view. This is in a penthouse. And this is, how much is this? 7 mil? I don't know why I think that's it. That sounds like a deal. All right, so pretty sure those paintings are like super expensive. Got a staircase in this? What? Let's see, where are you gonna eat though? Oh, this was remodeled. That's what this was. Let me see if I can find the previous post. Says it's a French tri-level Houston penthouse. They started remodeling it 2 years ago, 2018. So let's go through that. Let's see here. 2,500 square foot terrace, bro. It's bigger than my house. What else we got here? Okay, so I'm gonna switch this so you can see the kind of like the before and after. Okay, so let's go through it here. So let's do the before and after. The $7 million flip. Look at this. I don't know what to tell you. It's a huge difference. I didn't take that many pictures. But that terrace, though. Wow. It's nice. That's the view right there. And this is in the memorial area. Well, one benefit here, if it ever gets flooded, it'll be alright. Alright, well, I think that's going to do it. I'm going to wrap it up, guys. I got things to do. Get you guys on the flippity flip. Peace.